So what's the reality? So when you have sort of PMIs rolling over, but then you have the CEO of a copper company saying that supplies are actually pretty tight and inventories are coming down, China demand's there, who's right?
Both.
How?
Because if our forecast is right, the second quarter of this year, we should see more concrete signs of economic stability and then gradual recovery in the following months. So that will increase the Chinese demand for imports and including commodity like copper. So, it is an unfolding story.
So how much of that is going to be dependent on, say, all the new loans that we saw in January and the credit that's really been popping, and sort of can that offset any global weakness with trade?
Not completely offsetting the global contraction on trade, but the credit growth is very important. We do need to see continuation of recovery in credit growth, which we have seen some green shoots in the past 2 months already. I believe if you even look at the PMI numbers, new orders actually didn't do too badly. It's held up steadily, but then when you have the new export orders coming down, which means that the domestic component in China is actually not too bad. So we may be seeing the start of stabilization in China here.
Are we buying problems down the road with China? Because when President Xi came in, he really wanted to cut down on some of the leverage, and now he's going to have to re-leverage in order to get the economy going.
Well, the short-term policy direction is to re-leverage a bit. Right. But then the medium to long term is that when the economy stabilizes, he will go back to the deleveraging process.
So when you take a look at moving forward, what's your best base case for a trade relationship between the U.S. And China? I mean, we saw some pretty strong words. Robert Lighthizer saying there's going to be concrete enforcement, currency manipulation. There's going to be an agreement on that. No deal without a deal on everything. What happens?
Well, the negotiation is going to be a very long-term process. It could last for a year, 2 years, some years. But I think in the meantime, as long as the two sides are agreeing to sit down and talk, that's already progress in my mind. The U.S. is right that China has to do a lot of structural reforms, and China realizes that too. But from the Chinese perspective, how much they can actually deliver may not be necessarily be equal to how much the market or us in the developed world expects it to deliver. So that gap is what's driving volatility in asset prices.